Okay, hello traders. Welcome to this live intraday strategy webinar on SB Trade Desk. Today is Tuesday, November 12th. Mike Boutros on the horn with you. Eman, good to see you this morning. Pooja, Peter, DJ, great to be with you guys. So sorry about the delay this morning, but not much new as far as updates. Look, the Euro range contracted overnight, broke lower. So I'm still looking for that 109.94 possible tag. And we'll go over the DXY levels as well as gold and Kiwi from last night. And then we'll circle back and hit the other update as well as far as Aussie, Sterling, and CAD. Any other questions or trade setups, guys, as always, feel free to throw them on the message board at any time. So I'm a little running behind this morning, but we got this. All right, let's jump right in. So here's the DXY. Everything is still at that provocative stance that we were talking about yesterday. The initial turn down that we saw kind of set some nice weekly opening ranges right below resistance, right below significant levels of confluence zones here. So here's, again, the DXY update that we've been looking at. As far as the weekly is concerned, nothing new to write about here. Again, just highlighting your key levels. We talked about all of these levels yesterday, guys, so I don't want to get too much in the weeds on the longer term charts today. But near-term slope resistance, 50% retracement of the last month's range. Nice spot, 98.40. We were talking about that yesterday. It's basically what we're still holding. Now, if we get a breach here, does it constitute a breakout? Well, near term, it would. And the 618 would take you back into 98.70, which again has been a decent pivot in and of itself. But the onus right now is on the bulls to push through this. Momentum knocking on the door in 60. This is the spot. If it's going to fail, this is where we want it to fail. If it's going to break out, whoops. Sorry about that, guys. Bear with me one moment. Okay. If it's going to break out, this would be like the place to look. Okay. So really important to watch this spot right here. Here's what it looks like on the intraday chart. And it's the same setup we've been following from the start of the week. So here's where we opened up, slope resistance, 50% retracement, 98.40. The weekly open, the objective weekly open now comes in at 98.36. That's what I highlighted to you guys last night. Watch that region. Okay, so initial pullback 98.23 didn't give us much of a bounce. You saw a little bit of a drag there. Here we are, full round trip, weekly opening range right below, slope resistance. If we get a breach, like I said here again, you're looking for 98.70, okay? Slope comes in around 98.60 here, but you get the picture. That's the risk with a breach here. And obviously on the daily chart, that would be just a simple break of downslope resistance. That said, you're at resistance. You're at resistance, okay? Still have near-term support at 98, guys. That's going to be near-term bullish inval. You get below 98, now you're talking about a break of the median line, and you'd be looking for a drop into the lower parallel. But the levels are clean. The slope is clean. Just need some momentum here. Just need some momentum here. Questions on DXY? You can kind of scratch this right now. Let's just clean this up. And you can scratch this as well at this point too. All right. So you work with these levels here on the on DXY moving forward. All right. So what does that mean for Euro? Here's number 2. So Euro is flirting with a little bit of a drawdown, a little bit closer to that 109.94 figure as well. Here's what Euro looked like last night. So really nice spot of where we turned. It looked too clean for comfort, but it was a nice bounce. Okay. And here you could just see the precision, guys, of why we work with slopes so often. You know, the gradient, it's just held like a charm. So we broke through the objective weekly open, but not by much. It's only Tuesday. I don't want to constitute a weekly opening range break per se just yet. But remember, said that we were looking for a possibility of downside exhaustion near slope support early in the week. So here's your Monday, try to bounce, failure. Here's the slope. Here's the key 618 retracement of the advance off the lows you made in October. That's 109.94. Now remember the significance of this region again, really decent pivot in price. If we go back out to the weekly charts, like massive significance. Just below that at 109.76, you have the low week reversal close for the year. And that converges on the 144 parallel of that broader pitchfork from 2015. There's a lot there. Okay, there's a lot there. And especially below 110, this thing starts sinking through 110. You're going to start hearing all the chatter. Oh my goodness, euro, and all these people and their mother are going to start coming out and giving their opinion on this. I think that's when we start to look for the exhaustion. Okay, so 109.76, 109.94. We talked about it yesterday. That's the big spot for euro. Looking for downside exhaustion. I honestly don't even, I hope it doesn't even get quite that low, but that's the idea here, okay? That's the idea here. You've had 2 up days so far this entire month, okay? And you're flirting with a break of slope support here. I happen, again, to favor these types of scenarios for playing exhaustion, for playing the pullback, for playing the counter trend. So let it get out. Let it give out. If we get a deeper cut here, maybe you get some ongoing divergence, adds to the sort of flavor of the play. Here's the 120-minute chart on the euro. You know, maybe you get that washout near the 110 handle, maybe not quite as deep as 109.94, but really nice Fibonacci ratio there. As far as slope is concerned, the lower parallel converges on there, basically into trade tomorrow. So it's just a nice spot. Okay, just a nice spot. That being said, no change to any of the euro levels, guys. We're working with the same setup from last night. Any questions on euro? All right, moving right along. Just taking a look at the docket here, you have CPI on tap tomorrow for the UK and the US. US will be second print. That's not going to be a major market reader, but Aussie employment data on tap tomorrow. So those levels have been pretty good. That's on the list. From last night, gold. So we got euro, still working with this same slope. You know, we were hoping that we would get the bigger bounce here just on account of where we were again on the daily charts, but have to allot the possibility for another slide towards that 109.94. Still looking for exhaustion, guys. Nothing's really fundamentally changed for what we're talking about here. But if this is a break of upslope support, the risk is still for a little bit more of a spill before we get the turn. From last night, let's hit Kiwi real quick. So this one is quite interesting. I put out a piece on Daily FX. I don't know if you guys saw it, the weekly chart, this chart right here, kind of just throwing out there like, well, here's the major key levels you need to watch. Okay, it's on the top side, 64.36. That's going to be 2018 low close as the low we made late in the year there. And then on the downside, you have 63.13 into 63.04, give or take. You got the 618 retracement. You got the low week close again for this year. You got downslope support. So a really interesting setup to start things off. And here's what the daily chart looked like. You know, even if you get that last stab, very similar to what we're looking at here with euro, right? Even if you get that last stab lower, well, that's a beautiful confluence support zone there. And you have basic slope as well. 618 retracement, low week close. Interesting, right? You also have the median line there for the current operative pitchfork that we've been following. All converge right there in that little spot. So you could see a new low, but the initial reaction we got was just phenomenal, right? Just pips away from a parallel, the same parallel of the same slope that we've been in off the lows from, I guess that's September, October. And we drew this in the pitch in the webinar yesterday, guys. A pitchfork off the high. You had the 50 line or the 25% line right there. So I love, like I said yesterday, I love where this thing turned. We just need to see some validation that that's going to be a more significant reversal. Here's what it looks like now. So again, I mean, I don't want to bore you guys, and you have that report you can always reference, but there it is. The whole thing with Kiwi is that it made an outside weekly reversal off resistance last week. That's typically bearish. But we don't want to just take that bearish tone and run with it, right? It's bearish in that it comes off of a downslope resistance, former swing lows, just structural resistance. But the pullback still has to deal with this key zone. So if this is a more significant reversal, this is your first hurdle of support. And that was the whole objective. Here's Kiwi. Okay, low week close, 618, 6303, 6313. Here's the intraday. Okay, here's a 2-hour chart. So the levels are exactly the same. Nothing's changed. The bounce here fizzled last night. We pulled back right back into 63.35. That's that 50% retracement. That's where we opened the week. I think I gave you guys 60. Weekly open 63.26 is where we actually opened the week. We register a load in overnight trade at 63.25. All right, so it's like this thing is set. Weekly opening range right above weekly open support, right above slope support. This chart might seem a little bit more cluttered than the one you see at home because I just wanted to delete this when I took that picture for you guys to keep it all clean, but you get the picture. You get the picture. We're simply testing slope support. How many setups are we going over today where this is the same exact scenario, guys? So again, prudence pays, use patience, stay nimble here. It's still, this could crack and you'd get the spill towards 63 is the next downside target. That's the 618, right? Very similar to Euro. If you get the crack and the spill to its next downside target, that's the 618. So many setups are essentially reflecting the same type of technical developments here early in the week. So listen, we're going to get a play and the break should be decisive across most of these. So, keep the powder dry. Okay, keep the powder dry. If you're holding shorts, no, I wouldn't get too comfortable. No. I'd start to wrap a little off the table here in Kiwi. Okay. How do I say this in a way that makes sense? You're break even already? Good. Yeah. So if you're at break even, you're playing with the house's money. I would say leave a little on the table for 63 if you get the break, but you should have some profits booked in this trade. If you were holding a short in Kiwi, you should have some profits booked in that trade because you're at support. Like, what's the objective of trying to push this from here with a new trade? Now, I wouldn't try necessarily fade it per se, but this is the support structure that you want to look for into the US Open, okay? It's against the extremes, guys, anything that you do from here. Against the extremes of Friday's low, and if it rallies and you try to short it and you really think it's going to get the break, it needs to be against the extremes of the weekly range high. There's nothing to do here beyond that because you're at such a pivot point that if it breaks lower, you have another like 40 pips to the downside. If it breaches higher, you're looking for resumption of the broader uptrend. So there's a lot to sort of encounter once we clear this range. Make sense? All right, so that is Kiwi dollar. You do have some commentary from the governor at Parliament. I think that's going to hit tomorrow, if I'm not mistaken, in New Zealand, but should be relatively limited on that front. So Pooja says, good morning. I'm thinking gold long at 1445. Yeah, me too. It's funny because this one be number 4. Here's gold. We're finally getting that gold kick, right? And now everyone's jumping on board. Look, this was such a huge region. I'm sick and I feel like you guys are sick of hearing me talk about it, but we've been talking about 1451, 1461 in gold for like months and months and months and months and months. It was far out call. As this thing was testing 1520s, not just 2 weeks ago, people were getting all bullish again and all this nonsense. Oh, they got to reprice the Fed and it is. Look, the technical structure is the technical structure is the technical structure. Okay, we were looking for the new low. We got the new low, 1451 on a weekly standpoint. Here's what it looks like on gold weekly charts. Was a huge pivot point. That's the 100% extension from the advance off the lows he made in 2015. It's 100% extension from the decline off the highs he made this year. Huge pivot in price, right? Just a very objective, nice range. And here we are. Okay, so we're not going to sit there and pat our back and gloat for too long. That's all I'll say from here. But the point being is watch out. If we're going to get recovery or a bounce, this would be the spot. With the same respect, Pooja, if it breaks, you get a weekly close sub 1451. I mean, in general, any weakness beyond this huge weekly pivot zone, and you're risking a much steeper decline. So on the long approach, my only, I guess I would say you're well defined as far as you'll know quickly if you're wrong. Okay, you'll know quickly if you're wrong. Now my problem with it, Pooja, is trying to get too cute with the reversal before getting conviction in price. So I want to see something. I want to see a signal. I want to see something telling me to take that counter trend trade because I just don't see it yet. Here's the daily chart, right? So this would be our fourth consecutive day down day in a row. Like I said, we've only had 2 up days this entire month in gold. Here's the support zone, okay, that we're talking about just lower. You see this region? This is what freaks me out a little bit on the intraday, Pooja, on the intraday or intra-week, I should say, just not on a weekly close basis, right? Like we could spike down into 1441 just to satisfy this slope. And this is basic slope support. Okay. Again, pivot, 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 breakthrough, pivot, pivot, pivot. Okay. If we take a basic parallel of slope resistance off the low that we made back in September, I mean, this one you could be obviously, you can make arguments for both sides. But you could envision a scenario. My point being, you can envision a scenario where it wipes someone out, where it wipes out the weak hands and then recovers. Meanwhile, the whole time, never closing below 1451, which would just screw us. This is a huge zone for me. Even on the near-term approach, 1460 ends up being the 618 of the advance off the lows from August. In case you didn't like that low and you wanted to use the actual July low, look where it is, 1448. That's the exact low we're at right now. So there's just so much lined up here for me. It's worth being a little bit more patient and waiting for the actual clear-cut signal, in my opinion. So what do we do? Well, here's what it looks like on the intraday. And this is what I was talking about. So Pooja, when I talk about looking for a signal, I'm talking about breaking or invalidating some sort of downslope resistance, which we haven't done. This is the 240. Here's the 120, right? Hell, here's the 60. It's just not there. You know what I mean? So I would love it. I would love to play the long basically right here against the stop, against the low, and just target 1461 and 1472. But like I said, the signal's just not there yet. I think ultimately that's going to be the play, and it's going to tick me off if I'm not in it. But ideal scenario, Pooja, this thing washes out one more time and then rips. If it washes out right here and fails at that low, so be it. 1461 breach is going to open up the door. If it washes out to the lower parallel and then recovers above 1451 on a daily close basis, I think that's your stronger signal. I think that's your stronger signal. Um, and then you look to move off from there. Pooja, what do you have at 1445? Let me ask you that. Just slope, or is there a lateral level that you're looking at there? I'd be interested to see what that looks like. But the gold levels do look pretty close to 786 retracement. Okay, I gotcha. The different range. Okay. Watch this region. Watch this region. And wave A, wave C, if that corrects, was a triangle. Okay, I see your justification behind it. Let's see. I would love to see this thing hold support. I mean, it's a good spot. We've talked about this zone for a while. I am no longer on the shorts. I am no longer interested in the shorts. I'm just trying to gauge where we can find support and possible entries. At the same respect, pivot, close below 1451. Watch out below. Any questions on gold? It's going to make headlines this week. It's a big move for gold. Relatively speaking, on a weekly standpoint, this may be, let's check it out, already one of the largest ranges this year, or second to largest. Well, it's definitely the largest weekly decline this year. And it's largest weekly range since the advance that we made back in August. Pretty interesting. Pretty interesting that you get these kind of factors starting to develop at these turns. Not bad. All right. So I divert. Let's go back to the majors here. So we hit Kiwi. Here is dollar CAD. 1, 2, 3, 4 is number 5. Here's what Looney's doing. So we went over the weekly implications for the Looney yesterday in the webinar. 32.52. Talked to you guys about that. The 618 retracement, a decline off the highs that we made back here in September. That was a massive outside weekly reversal that took us into a consolidation pattern for literally 4.5 weeks. That broke to the downside. Here we are. It's been kind of a messy play on the weekly chart. And largely speaking, guys, it is still a simple contractionary range on the broader picture for dollar CAD. But here's what it looks like on the intraday, or on the weekly, or on the daily first. So breakouts, or are they fake outs? What is this? Here's dollar CAD in the daily chart. So the pivot above 31.64, 31.55, we talked about that being sort of a play here with this breach right here. First level of major focus was 32.31, and then last month's open was right here. This advance takes momentum into 60 yesterday, takes price into the 618 retracement of the decline off the highs. Again, if we take the stretch high from the actual stretch we made back in September as opposed to last month's, it gives you 32.50, and we talked about that yesterday. It's basically the 618. So we're at near-term resistance, okay? So we're going to adjust this to that high. A quick switcheroo. All right, 32.52. That's resistance. That's that. And here's what it looks like on the intraday. Super clean. Super clean. You know what's funny is that sometimes I tell you guys, you know, the daily chart's awesome. We have really clear clarity, and then you jump into the intraday chart and it's a mess and it's just jackknife. What we've seen over the last 48, 72 hours on all of these setups is that the daily charts are actually starting to get a little yucky, but intraday, the path, the glide, the slope on these has been insane. Here's dollar CAD, a thing that got super messy with this chop fest that we were doing here at the 38.2 retracement for like 2 weeks. Here's the breakout, clear cut break, test of former slope resistance as support, move right on, ascending pitchfork off of the lows, catching resistance, raised ceiling. Here's the 25% line, holding support, really, really clean. Near-term support at this point, you're looking at 32. Drop 31.78. Next topside targeted for breaches would be 32.80, but we're generally looking for exhaustion. You'll note that we've been marking ongoing momentum divergence since last week with a series of ongoing higher highs, higher highs, higher highs, the oscillator holding equal highs on the 2-hour chart. You can see a same type of development has been playing out on the 1-hour chart. This is the 60-minute. This was actually a really compelling signal this morning as price action was making, again, a higher high into that 618. The oscillator was making an equal high into that 60 threshold. And here's the turn. So look, it's coming into the weekly open. Weekly open comes in at 32.18. If you get that break, I'm liking it still. Now, dollar CAD's, it's a breakout, guys. So this is counter trend, but we just talked about 4 different factors essentially that we're looking at. They're all pointing to the possibility of a little bit of a washout here, i.e. the divergence in momentum, the level that you're coming into is resistance, the slope that you're coming into, all looks pretty good. So I'm hoping we get a little bit more of a pullback. You do have some data tomorrow. It's not data. I think Polos is talking or something in Canada at the Bank of Canada. So look for that. Could be an event risk on tap tomorrow. 32, 31.96 is essentially what you'd need to break to put the shorts back in control here. Okay, so anything that we're in here, be very nimble. As we get into 32.18, weekly open support, bring your stops to break even if you're in this, and take a little off the table. 32, 31.96 is going to be the real test if you get down there. Any questions on dollar CAD? Okay, so no change to that slope. The only adjustment that we made, again, is that 618. We pushed it to the high, so it gave us a little bit more latitude on the upside. That's all we did here. And here's the turn. Okay, so that's number 2 on the com block. For dollar CAD. Here's Aussie, number 6. So Aussie for me kind of just lost steam. I still love the setup. It's just not. It's kind of stuck in this little range here. Look, what are the 2 levels that we talked about on the entire way down since the break? There were 2 levels of interest. They were 68.46 and 68.30. Okay, there's a 100% extension from a decline off the highs, 38.2 off the low. Both of them kind of kicked out into slope into the start of this week. So here's that 100% extension. That's satisfied at 68.46. I'm going to go ahead and just scratch that, guys, for the sake of clarity to keep the charts clean. But you can see the structure is holding, okay? So the next sort of confluence zone is still going to be 68.30, a 618 of this range, which is why I'm not keeping this as sort of a focus level, guys. It's just a pivot. I mean, forget the fact that it's the 618 retracement. You have former swing highs, accelerated breakout, former swing lows, all right there. So, we could even do here, we can even do this. Forget that it's the retracement. I don't want to mislead people. It's 68.10 right there. And then now we can also bring up the retracement levels from here, just to give this thing some color. 68 comes up again, right? So look, our ideal scenario again is that we're basing in Aussie. I do favor, inevitably a stronger topside approach break in Aussie. But look, the breakdown is following this slope, support, 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 divergence, right? Oscillator with a lower low. There's the line chart, lower low, lower low. These typically tend to be very strong divergence signals. Now it's a 120-minute chart, so if you were to see this reflected here, oh wait, it is. Okay, so here's a lower low in price, real subtle. Here's a higher low in the oscillator. Typically, I like working off these. Typically, I like working off these. So, I'm thinking you get a bounce here in Aussie. If you do get it, we'll tack on a quick retracement and see where we can get some confluence zones. Let's do that now, actually. Just see what this looks like. Interesting. That's the weekly open, actually. I'll draw that in. 50. 618. We can scratch that. All right. Hmm. So that's what we're looking at here with Aussie. Sorry for the silence there. I just wanted to kind of rework those levels real quick. Here's what it looks like on the hourly chart. Here's the 120 again, just for reference and consistency here. But you can see we're just crawling down that lower parallel. So there hasn't really been much of an excitement for us to be able to try to actually pull off a trade in this if you're not holding anything already. But you are testing downslope support near term. So if anything's going to happen, again, my humble opinion is you look for a little bit more of a recovery off this level. Ultimately, if there's further downside to go for 68, you'll find resistance near the median line. You'll find resistance near that upper parallel. But on the account of slope, on the account of momentum divergence, on account of how price action has been operating down here, I think you're on the lookout here for a little bit of a recovery before the next move lower. So watch out on Aussie. 68, I want to say 68.70 is like a target, but look, watch the slope. It's pointless to not pay attention. And that slope converges basically on the opening range highs for the week right here. So don't go targeting like 68.70 yet and then get clipped out at 68.65 or 68.60. Watch this slope, watch the objective weekly opening range high. That's sort of the first level you'd look for. If we break through that, I do think you get a larger sort of resumptive correction towards the upper parallel. But for me, as you head into 68.30 near term, you do risk some of that exhaustion on the downside. Okay, and if 68.30 gives out, by the way, it'll likely be an accelerated drop just because of the nature of where it is. You'd expect to see a pretty quick drop towards 68 if that gives out. So I'm using that as sort of a near-term pivot point in support. Any questions on Aussie? Kind of steady as she goes on a lot of these setups. Okay, guys, I flew through these today. That's all I have on my list. Are there any other questions or trade setups you guys are looking at or would like to review? Feel free to throw them on the message board. I'm a big fan of not forcing the trade, guys. And on some of these trades right now, where we are in price, I'm not gonna push it until we get that clarity. So here's, for example, crude prices. I've been getting a lot of questions on crude, both on Twitter, via email, on Daily Effects. Like, this is one of those trades where, yeah, you need to watch out because it could go both ways. I mean, you're in consolidation near the multi-month highs, or not multi-month highs. Here's the October open. right? Or here's your October close rather. The open of October opening range broke higher. Um, you're trading near the highs. This consolidation, if it does break, I think you get a tag of 58.62 before this thing turns. And that's still within the confines of this formation, which has continued to hold since last month. And that doesn't happen very often in crude. So like a lot of these trades, we kind of need to wait out the ranges. They're gonna clear out. Until they do, guys. If you want to play on the inside of the range, I'm all about it. Okay, but you're looking at much nearer term time frames. If you're looking to target a 60 target on this or a 55 target, I just don't think the clarity's there. I just don't think the clarity's there. So just some food for thought there on crude prices. Any other questions, guys? Feel free. Otherwise, we will go ahead and wrap things up here. Again, I'll see you guys on Thursday morning. We'll pick things up again and check things out into the close of the week. Till then, look for some of these things to clear out. I mean, all of these trades, euro at support, looks like we're still holding the opening range lows. Sterling, we didn't talk about that today, but guys, the levels have been exactly the same too. We pulled into that resistance. We talked about it yesterday in the webinar. Here's support. Here's support. If sterling has broken out, we don't want to see these lows compromised today. Okay, look for a 128 hold of support on pound. Pretty important here. Pretty important. So that's a trade I'm kind of looking at. I hope we didn't just miss entry right here, but we'll be following that one. Again, Swissy was a trade that kind of broke out as well. The breakout testing former slope resistance, now is support. I'm not involved in this one either, but I'm looking to see the opening range here give us validation, a little bit cleaner with the fact that it's sitting at support now. But you see all of these setups that are coming in some pretty critical regions. Watch them as we get deeper into US trade today. And I will see you guys on Thursday morning. Thanks, man. Pooja, I appreciate it. Have a great day, guys. Best of luck trading.